Hey guys, welcome back. Hope you're having a great Saturday. Today's video is going to focus on the next era because we know that Wall Street is continuing to argue about which individual AI company wins next. But my personal opinion is that we need to bet on the companies that are working us through the bottlenecks, the companies that are helping solve the constraints in the market. Those are going to be the winners. Guys, the biggest spending wave in technology history is already underway. It is estimated over the next couple of years that we will see roughly $5.5 trillion of spending on AI infrastructure. It's already being committed. So the question isn't whether it's going to be spent. The question is, where will that money flow to first? And I believe it's going to flow right into the bottlenecks. This is my personal opinion. You've heard me share it before on the channel. But if you want to make money in this market, you have to follow the laws of scarcity. Today, we're going to break down 3 critical bottlenecks where that $5.5 trillion is actually going to be spent, so you can be a more informed and knowledgeable investor as we move forward. But before I jump into that data, guys, make sure you hit like and subscribe to the channel. We need to continue to grow our community together. We need to continue to learn together. So if you get value from these videos, I still have about 50% of our audience that hasn't subscribed. So do me a favor, hit subscribe, join the community. All right, let's start off. I first want to just lay the groundwork for why I said a new era, because we are making a shift. We've talked about it a ton of times on the channel, but I put together a very simple graphic that I want to share that'll help us understand the shift that we're seeing. You can see on your screen, it is the shift into the agentic era, because we're moving rapidly away from the training era. You can see on the left side, that training area the focus was to scale up compute for training. Look at the relationship between the CPU and the GPUs. This is where dozens of GPUs were hooked up to a single CPU to learn data. We are going to shift now into the agentic era, where AI agents behave like real people. They don't just sit there. They execute complex workloads, orchestrate tasks, and they constantly talk to other machines. Each agent will need its own compute, its memory, and its open communication highway. This is the simple shift, in my opinion, that completely upends the old hardware math. In fact, the agentic era is projected to be roughly 3 times the size of the training era in hardware spend over the next 2 to 3 years. So let's jump over and take a look at an article that I read early this morning that I think lays out the case perfectly, and it's what I want to present to all of you on the channel today. You can see this is from the Spear Investment Group, 3 bottlenecks shaping AI's next $1 trillion opportunity. So let's walk through those bottlenecks together. You can see what the author calls out. Their last report from Spear laid out a $5.5 trillion CapEx supercycle and closed by naming 3 bottlenecks that could cap the machine. And those bottlenecks, they mentioned that memory has already shown up as a bottleneck. And the performance that we're seeing in the market, the earnings power, the pricing power from the manufacturers are proving that. Just look at Micron's last quarter, as they mentioned. But if you look down below, I've highlighted those bullet points. They're calling out CPUs, memory, and networking as the 3 critical bottlenecks. You guys know I've talked about this on the channel. We've talked about memory extensively, but we have talked about the connectivity wall as well. That's all the networking. We've talked about other bottlenecks, such as whether it be the power wall, the capital wall. We've also talked about the shift to the CPU with the agentic era. So I want to walk through this article because I think it lays it out perfectly, and it shows a big growth in the total addressable market for each of these sectors as well. But let's start off with what they're calling the most underappreciated inflection. So you can see here when they said during the model training phase, CPUs were treated as an afterthought, is what the authors essentially said. You didn't need many of them. But in the agentic area, the ratio collapses towards a 1 CPU for 1 GPU, because every single AI agent requires its own orchestration layer. Look at the math on your screen. I want to pull that table up here from Cloudflare. The data shows the sheer scale of what's coming for us in the market. In the United States, to serve 100 million knowledge workers at 1 agent per worker, you need roughly 10 million server CPUs. But expand that globally. Look at the number below. You have 1 billion knowledge workers running 10 agents each with 10 managed per CPU. You would need 1 billion CPU. Because of this bottleneck, we see the CPU market, it's going to explode from roughly 35 to 40 billion today to over 200 billion in a total addressable market by 2030. That is significantly higher than AMD's own estimate of 120 billion, and it blows past the sell side consensus of 170 billion. Guys, this is a huge opportunity for us as investors. We'll get into some of the individual companies towards the end of the video. But for me, I think just at the top of my head, the industry leaders that you have to think about would be AMD, of course, would be ARM. Intel is there as well. They've all started to flag this shift. And in 2026, it is cementing itself as the core for those companies, a core of their inflection and how they're moving forward and what their strategies look like as well. This is only the first leg of the massive multi-year climb that we're going to see with CPUs to solve this constraint as we move into the agentic era overall. But let's shift to the second bottleneck, one that we are very familiar with on this channel. It is the memory battlefield, as they call it. And they want to talk about what Micron just showed us. You can see in the paragraph here, Micron beat every segment. They beat what their beat was almost all pricing, though, not volume. Adjusted gross margins nearly doubled to 80%, unheard of for a business that historically earned 30 to 50%. In fact, we know if we look at Micron's most recent quarterly earnings, their gross margin was about 85%. If you compare that to a year ago, it was 39% for the company. So significant jump. Prices are up for memory. They say 7x from the cycle bottom. I think this is a little older data, quite frankly. I think it's even higher than that right now. But it's flowing straight to Micron and the other manufacturers into their bottom line, straight out of the budgets of the hyperscalers, companies like NVIDIA, Google, and Microsoft, as they mentioned below. Just look at the quarterly earnings here. Now, guys, this is Q2 earnings, so they're a little behind in this article. They didn't mention Q3 for Micron, but we know if you just look at revenue, it says 24 billion essentially. We know that jumped up to 41.5 billion in the next quarter. I think if you just plotted that next to it, you would see that dramatic jump overall. That was up. If you go 41.5, just go back a year ago, was 9 billion, just over 9 billion in revenue for Micron. The net income has jumped from 2.18 billion to almost 29 billion in this last quarter in Q3. I mentioned the gross margins. It was at 85%, up from 39% a year ago. So this is the type of earnings and pricing power we're seeing with the memory companies in the market right now. It's all being driven by extraordinary pricing power from these companies. The money that once flowed through the hyperscaler CapEx budgets is now flowing directly into the balance sheets of the memory manufacturers. And what is driving this structural squeeze? There's kind of two things. One we know well. It's the high bandwidth memory. That demand is already underway, and there's deep supply constraints based on that. And we know that is Micron, Samsung, and SK Hynix. But on top of that, as it calls out right underneath this box, you can see the agentic AI adds a second separate demand stream on top of high bandwidth memory. Agents need an ordinary DRAM and NAND, the same memory that powers a normal PC. And as Micron calls out here, their CEO sees no light at the end of the tunnel, or no line of sight where supply catches up. We think that squeeze runs into 2028. We saw that from SK Hynix as well. As they mentioned, next year will be the worst year overall, but then they see constraints out to 2030 overall. But look at the addressable market that you see right here on your screen. The total addressable market for memory, it is shifting gears, as you can see in that box right here, that display. Based on the current industry forecasts and framework, the AI memory opportunity expands from a sub-100 billion HBM market today towards roughly a 900 billion before it ultimately exceeds 2 trillion later this decade, all being driven by the agentic AI era. And we know robotics on top of that is even going to drive more on top of it. This is a massive structural shift for an industry that historically sold purely at volatile spot prices. We see the customer relationships have changed with their strategic customer agreements as well. But as investors, I think we have to look at the risks as well. And this is probably the one of the three bottlenecks they call out that, feels it has more risk associated than others. Because if the broader AI build out slows down, if customers kind of walk away, or if they over purchase, or if we see the Chinese manufacturers, that competition ramps up faster than we think, it could present a risk to this sector overall. So while the memory players are thriving, we do need to always keep it in the top of our head, and we need to find ways to hedge the risk. And so different investors can solve this in different ways. Some, like myself, will own Micron. They'll own other memory manufacturers, but others will look to own picks and shovels. I own some of them as well. I think it's a great way to hedge the risk. I want to show you these results here, because when you look at some of the returns that we've seen for the picks and shovels, these are the companies, if you own both memory and the equipment suppliers, you actually get to kind of, take advantage of the capital flow that comes into the entire ecosystem, not just the memory, but the equipment as well. Look at these picks and shovels that you see in the graph right here, just calling out the 3-year total returns for Lam, KLA, as well as Applied Materials. Look at the growth rates that you see there, over 500%, 400%, and almost 350% for 3 years for these equipment suppliers. Now, those numbers are a little higher when I cross-reference it and look at Yahoo Finance. They just come down a little bit. Like Lam is 477, KLA is about 328, and Applied Materials is just about 280, but still phenomenal returns over a 3-year period of time. So by investing in both equipment suppliers and the memory titans, you capture the mandatory infrastructure spend required to break through this bottleneck that we see in the market. And as I mentioned, with humanoid robots on the horizon, which require roughly 10x the memory of today's AI, the equipment cycle and the bottleneck could easily stretch into the next decade. But now let's shift to the third bottleneck that Spear calls out. And you see they call it their highest conviction call. And I want you to think about that. If thousands of AI agents are constantly talking to each other to execute tasks, as we saw in that first graphic that I put up, that massive data traffic, it has to move. If a network bottlenecks, if it slows down or stalls the data, the entire 5.5 trillion infrastructure will grind to a halt. So many analysts get bogged down in a simple debate. You can see it in that second paragraph down. Is it copper or is it optical? They actually said this framing is too simple. The reality on the ground is that it's both, deployed at different scale points across the data center. So they go on to mention that we prefer technology agnostic enablers like Astera Labs and Credo over any single medium overall. And so those companies are those two companies where the components are vital, no matter how the data is routed, whether it's copper or whether it's optical. The strain on the physical supply chain is already glaringly obvious right now. Look at the lead times you can see. Right here in the paragraph below, optical lead times have stretched to 12 months for specific products. Fiber pricing is up 50% since January, and industry estimates put an eventual optical market at 150 plus, 9x to what we see where we stand today overall. Look at the sheer complexity. I'll pull up this graph here. You can see it's the AI networking value chain. The complexity of this across the board. You have everything from optical suppliers like Coherent and Lumentum and Corning to component and internet leaders like Amphenol, Broadcom, Marvell, and NVIDIA, all the way up to system integrators like Cisco and Arista. Every single layer of this stack, guys, is experiencing unprecedented demand. Network is gearing up to quietly outperform both memory and the core hyperscalers this cycle. Therefore, the Spear Invest Group, which put this article together, they see this bottleneck as the largest consensus earning upside out of all three bottlenecks that they laid out. Let's bring all of this together, because in the agentic era that we're laying out, the agentic era for AI intelligence, the investment returns will accrue to whoever controls the scarce input. The scarce inputs just changed, as I showed you in the screen, and the constraints will now dictate the winners, in my opinion. We have to identify these constraints in the market and find the companies that are helping us work through them, because those will be the winners. That's where that $5.5 trillion will ultimately flow. To maximize your portfolio's exposure, remember these 3 key takeaways. Let me pull it up on the screen. We can walk through it together. But here are the 3 key takeaways that I would say is 1, the CPUs, you see on the left-hand side, they are inflecting and they are deeply under-owned. The shift to a 1-to-1 CPU to GPU ratio for agentic orchestration is creating a massive demand wave that the market consensus has drastically underestimated, in my opinion. So look for companies, those key players like you see below of AMD, Intel, ARM. These are the companies that are going to win as we shift into the agentic era. The second one in the middle is all around memory. We have talked extensively about it on this channel. You know, huge believer in the sector overall. They will continue to have critical importance as we shift into the agentic area. The memory pricing is real, but exposure to memory, make sure you get exposure to both memory and the equipment. Memory has experienced an incredible repricing, just a re-rating of the sector overall. But to hedge against any cyclicality or risk, focus your capital on both memory and the equipment giants like Lam Research, KLA, Applied Materials. They provide the tools that make the capacity expansion possible in the first place. And then finally, on the far right is the networking. It remains, as Spear said, their highest conviction play. With lead time stretching and data traffic compounding exponentially, the networking value chain holds the most significant consensus earnings upside in the entire sector, in their opinion. So look for companies like you see Arista, Cisco, Broadcom, Marvell, Astera Labs, and Credo. I would also say Corning. Put that in there as well. It's not listed on the board. So guys, in kind of closing, I would say we need to stop trying to chase the crowded trades of the past. Look to identify where these bottlenecks and constraints are in the market and position your capital where those are the tightest, because that is exactly where the CapEx billions are forced to flow. And just remember, as it said earlier, investment returns will accrue to whoever controls the scarce input. And right now, guys, that is compute in CPUs, memory, networking as well. So thanks for watching the video. I hope you learned something. Make sure you hit the like and subscribe button overall. Leave some comments. Let me know below what you think, and I'll see you in the next one.